Hey, I'm Abe, and today we are continuing in our discussion of all of the various ins and outs of mortgages, but specifically we're going to be looking at mortgage escrow accounts. Now, during the mortgage process, your lender will likely ask you if you'd like to open an escrow account or not. And what this does, and what this escrow account, the purpose that it serves, is that it bakes your property tax and your home insurance costs into your mortgage payment each month. And that's pretty much it. And this is mostly a question of whether you think you can manage saving for your property tax each year and paying your home insurance bill as it comes up each month, or whether you want someone else to sort of help manage that overall process. Going back to our example with the $100,000 house with 20% down, let's assume the home insurance is around $720 a year and your property tax is around 1.25% per year, which is what it is around here, and it will vary depending on what county you're in and what state and just generally where you're at. 1.25% of a $100,000 home is $1,250. So now normally with a 4% interest rate, your mortgage payment for just principal and interest would come to about $381. And if you split up your home insurance premium across 12 months, it comes out to about $60 a month that you would need to pay into home insurance. And then generally speaking, if you're going to have a budget to cover your property taxes each year, once that bill comes up, you'll need to save up to $1,250 each year, but effectively you're going to be needing each month about $104.17. So either you can pay a $381 mortgage and save and pay these bills on your own, or you can pay a mortgage payment of $545.17 every month and almost not worry about it. Now, if you like what I'm doing here and you're learning as we go, by all means hit the subscribe button, share me with your friends. Everybody needs to increase their general financial literacy. Ring that notifications bell and it will let you know 3 days a week when I post new videos. But getting back to it, what happens essentially is you get your mortgage payments each month and the bank takes that extra amount that you give them above and beyond whatever the principal and the interest adds up to, and it pays the home insurance and your property tax for you. It's in the bank's best interest for you to pay your property tax and your home insurance and to be generally protected. They are going to provide this service to you, and it will probably not cost you anything. One thing to be aware of, though, is that this is not an infallible process. If you pay into your escrow account every month through your mortgage payments, you're relying on someone else to pay your bills for you. And you're also relying on those bills to stay fixed as far as how much they will end up being, which they will not. They fluctuate over time, and mistakes can be made. You can then be on the hook to cover any late payment fees or any of the other repercussions that come along with not paying your property taxes or not having an up-to-date home insurance policy on your house. Personally, I have trust issues, and this is probably coming through with this, but personally I have trust issues and have heard horror stories about these escrow accounts just not making their payments on time, not having the correct amount saved, and then having to scramble and come up with money at the last second. And I'm just not down for that kind of stress. If I can manage my own bills, I can save a little bit every month and plan for the property taxes. They come at the same time every year. And while they're not the exact same dollar amount, they are in order of magnitude. You can get a ballpark estimate of how much they will be. And you can plan for that. I prefer to just manage it that way. It may not be the way that you would prefer to manage it. If you would prefer to have the bank sort of charge you a little bit extra every month so you don't have to worry about it, other people swear by it and use this device or this account with great success. So I leave it up to you. But that's what we've got for now. If you have any questions about escrow accounts, how they work, or how it might influence your whole loan process, by all means hit me up in the comments, and I will see you in the next video.